from the Meadowbrook Financials that's going to talk to us a little bit about today. So it's a little bit about real estate, which I believe strongly that one of the ways to build the right platform, real estate is one of the key ways to be able to do that. So the more you can get educated about how you can take advantage of your property yourself, how you can take leverage your property to build the residual incomes that you need. That's what we're going to do today. Feel free to jump in, ask your questions. This gentleman has taken time out of his busy schedule to be with us today. So please make sure to interact and get your questions in and invite some friends as well to join you. So how you doing, brother?
I'm doing great tonight, man. I appreciate you inviting me to be a part of this. I'm excited.
No, listen, like I said to you, I think that it's a great platform to be able to have young entrepreneurs such as yourself being able to dedicate your time. God gives us a way for you is when you can bring everybody up to really generate as much as income as they possibly can. So for me, that's my goal. That's the impact that I want to leave. That's the legacy that I would love to leave, to be able to say, okay, I have 20, 100 friends, or more than that, have everybody being able to level up and carry their own. So I think that's the beauty of what we try to do. So why don't you tell the folks a little bit about you, what the company is about, and then we'll get into some questions from the public.
Yeah, absolutely. So my name is Rajin Ramdeholl. I'm a senior vice president with Meadowbrook Financial. We are a mortgage banker, and I'm proud to say that we actually are one of the fastest growing bankers in the country. I've been with the company a little over 6 years. When I started with that company, we had a staff of just over maybe about 11 or 12 people. Now we have a staff over 134 people. And, we've done some amazing things. Even with COVID and everything, we are actually on track still to close almost $1 billion worth of business this year. So, it's exciting, but, kind of just speaking about one of the things you mentioned is the love that I have and the feeling that I have to want to see our own and so many others be able to rise up and step up and take advantage of opportunities. And that's something that I'm proud to say, not just myself, but I've got an amazing team in the office that's what we believe in. I've got an amazing sales staff that has their own stories of where they came from and where they are now, and their desire to help their community, because, funny thing, much of our staff are, minorities, and many of them are from the Caribbean. I mean, I'm from the Caribbean. I grew up in Guyana. So, for me, it's always something where I know the difficulties I had and my parents had, leaving a country to come here to try to create a betterment and a better life for myself and my brother, right? And so I know the struggles, and I'm fortunate to be in a place where I can help others.
Yeah, that's definitely what it's all about, to be able to impact. And creating wealth doesn't have to, you don't have to be a certain race or certain whatever. It's just because it's the impact, to be able to do more for people. It's what brings pleasure to me, and what I think that everyone that have the opportunity to do so as well. How did you transition into Meadowbrook? Were you working on your own, and then how did you transition into the financial world from where you started?
So I actually have been in the business now for about 17 years. I actually,
excellent.
Which I'm going to date myself, but I started when I was 21 years old. Never had experience, never sold a thing in my life. I had actually just at that time gotten married, and at that time you're married, you're thinking, hey, I've got to now start thinking a little bit differently, trying to put some money in the bank. And so at that time, it was back in 2004 and 3, and mortgages were kind of the thing at that time, and there was an opportunity. And so I said, you know what, let me try it out and see. I'll be honest with you, I didn't think, so the company that I started with, you had to do a 2-week training, and it was about, I think, 18 or 19 of us in that first class. And everyone in there had some type of sales experience, whether real estate, insurance, mortgages, something. And I'm sitting there looking around thinking, I have no experience at all. There's no way they're going to hire me. But the one thing that I did, say to myself was, if I'm going to give it a shot, I'm going to give it everything I got.
That's it.
And, I don't know if you remember, they had these, at the time, dummy books. So they had mortgages for dummies. And I bought that book, and I studied it every night. I read it as much as I could, wrote down as much as I could, studied it as much as I could. And after that 2-week training, myself and 2 others were the only 3 people that got hired. And then the rest is just history, but it's amazing. And I say it, to everyone that's out there that, you don't have to be built for that position, right? You just have to have that desire to be, successful in whatever you're venturing in.
Well, I think a lot of people don't understand that when we say that everyone has a talent, has a gift, those skills you talked about, I don't know the industry, but I know I'm willing to put the time in. Those are portable skills that you can take from an industry to different industries. Hence why a lot of people will take a chance on somebody that have that mindset over, I'm fully skilled, but I'm lazy. I don't want to. No, that's a skill set that you can't go out and buy that. But if you're going to succeed in the environment of creating your own, of creating a different income, of creating your own business, you have to have that mindset, because I will tell you, some days you wake up, you don't want to get up, you don't want to get it done. And if you don't listen to your own self and say, I got to get up, you got to build that over time. And that's what it takes in business. You're going to fail many times, but guess what? That one time you hit it is going to pay off for the 2-3 years of struggle and a lifetime of really reaping the benefits of that. So I'm glad you shared that with us as well. I think someone already penned a question. Before I forget it, I'm going to go over it. And then it's from Hakeem, the King. Is it possible to invest in development projects, the construction of properties per se, without going the route of flipping and renovating houses first?
Okay, so is it possible to invest in a development? I mean, it is, right? So it depends on how the question is being asked. If you're asking, how do I get financing for it, right? If you want to get financing for a project, obviously the other ways, instead of going, let's say, through flipping, is trying to get a bank loan, right? Which is possible, but then you have to show that bank that you have a history of working on projects and development, right? For them to feel some sort of a comfort level of investing in you or lending you money to invest in that project. That's one. Number 2, it's also if you're willing to put up a certain amount of capital to create a comfort level, for these lenders. So there are different ways, but the one thing I say to a lot of people when they're thinking about different types of lending, how the mentality of a lender is, how the mentality of a bank is, they look at risk. If you can do things to take out the risk level of what you're trying to do or to reassure them, then they'll feel a comfort of helping to invest into you, right? So if you show them, hey, listen, this is my track record of what I've done, and now I've been successful, or I've had success in these areas, and now I want to venture into something else. And I'll give you a really quick example of that. Then that lender feels a much more level of comfort to say, okay, I see your experience, I see where your mindset is at. Maybe you even have some capital that gives us a little bit more comfort, that knows that in case something happens, you can handle payments or whatever may come your way, right? And so we feel comfortable in venturing into that. An example of that I wanted to share was I met with some investors that came from Turkey, and they used to do a lot of high-rise developments in Turkey. Unfortunately, because of some things that happened in that country, they came to the US and they wanted to, over years, get into the same type of business, which is building projects and buildings and different things of that nature. but they had no experience in doing that in the US. So when we sat down, I said, listen, you need to develop a prospectus of showing your track record, your projects that you've done, how you've been able to build it, the funding you were able to get, you know, put it all together, and we'll sit down and we'll present it. And we were able to do that. And we got them an initial loan for a project in New Jersey of $4 million to build a project it was a smaller, like condominiums, but we were able to get them that loan just based upon their experience. So that's an example of being able to answer that question. Is there are many, many ways of getting financing for what you're looking for. But the main thing to understand is how you get that across to the bank to create a level of comfort.
Yeah, and you know, in the banking world, we say risk appetite. You for somebody,
Exactly.
and you know, somebody's gonna be willing to take a chance. It depends on how the market is trending. It depends how things are happening, or if they have enough capital, can they take a risk? You know, it's like for men and women that are dating. Sometimes we may have a risk appetite.
Yes, exactly.
Do I want to listen? I've been single for so long, but maybe I'm gonna take my chance, knowing that there's some things I see that I don't quite like, but I can work on that, right? So it's different ways to do it, and it works like that with money, because you got to build your brand, you got to build your credit, you got to be able to show, if I'm gonna give you $4 million. Everybody that's lending wants to know one thing: can you repay, and how are you gonna repay? How is the market? How is it trending? That's why you do projections to see, okay, that's why you got to read a lot. You got to research a lot, because you're making decisions based on projection, you know, a lot of the time. So, yeah.
And here's another great example of something, right? And I said, there are many different routes to get to where your ultimate goal is. There's a gentleman that I know personally that I've done many, many loans for in New Jersey. And this gentleman owns over 5,000 properties between New Jersey all the way down to Atlanta. But he started with hard money loans in New Jersey, and he would leverage it. Even though there were high interest rates, he learned how to leverage his money, and he leveraged it, and he built a portfolio, and he built a portfolio. And eventually he started with 100 properties. He leveraged the equity within those 100 properties to secure a blanket loan to get him a few extra millions to invest. And that's kind of how the snowball effect started happening, to the point where people knew his reputation, and you said it, his brand. They knew that he never, in all of those loans, never missed one payment. And they knew that this guy, he had a great track record. And so what happened was, people were willing to lend to him and lend to him. And now he basically almost dictates some of the terms that he wants, but he built that reputation, right? And he built that brand. But as I said, he used hard money as a way to be able to do that. And I thought that was a great story.
Right. Is the trust factor. You got to be able to do that, especially in business, you know, and, you know, from a banking perspective, folks look at, that's why when you're trying to get a mortgage, right, they're asking you for 2 years tax return. They want to see your bank statements, little things like overdraft, meaning that you're going into a negative. So, because what they want to see is how responsible you are with your money. They want to see all those things. And for you, it may be a small thing. For the lender, it's like, okay, if you're so easy for you to file for bankruptcy, maybe it was 20 years ago, they want to see the mindset. So those little things, as you trying to build your credit and build yourself to get in any type of investment, real estate, or even opening up a business, because you're going to need to do what? Go get money somewhere. So my question for you is, so between what you do and a traditional banking system, what are some of the benefits of someone that wants to get into the real estate business, of leveraging you versus going to a bank where they have an account to be able to borrow money?
That's a great question. Flexibility. That's the key. It's flexibility, right? People nowadays, they want money and they want it as easy as possible. Now, I read a great article a few months ago that actually said that nationwide, mortgage bankers lent over 73% of all loans for people that were looking to buy residential properties nationwide.
Wow.
And the reason for that is, as I said, the flexibility and the ease, right? Our underwriting guidelines are more flexible. Our credit score requirements and guidelines are more flexible. Our interpretations of, let's say, title and things that could be construed as conflicts on title, we are more flexible in those areas. So for most people, as I said, if you were posed, hey, you could take 3 to 4 months of being able to get a mortgage, or you could take 30 days. What would we prefer, right? We would prefer, hey, if I could get a loan in 30 days to start my investments and have the ease of getting my money, I would take that. So that's really, I would say, the biggest benefit of utilizing a banker. The other thing is, understand, all we do every single day, day in and day out, is mortgage financing, right? So in a sense, when that's all you're doing, you can almost kind of perfect it in a way, right? Our underwriters, that's how they're trained to look at. They're looking at underwriting files all day long. Our salespeople are processing. So the system itself is set up to just move along and move efficiently. And so that's why, and at the same time, you're not giving up any of the benefits of getting low interest rates or, any of those things. So if you can get aggressive interest rates that are market rates and the ease of borrowing, I think that is why you have seen the rise of the mortgage bankers in the country.
Excellent. So do you now, are you seeing a lot of folks leveraging the equity in their property to be able to kind of start a business? Or because I know a lot of people are scared to leverage some of the equity that they have because, hey, listen, I was struggling paying my mortgage. Now you tell me to take 20,000 out, but I have this business idea that we know that within the first 2 years of any business, there's really not really much lending opportunities to be able to capitalize on. So are you seeing that trend? And what would you advise for folks to be able to do, especially if they have an idea, they know that can work?
So I'll get to that in 1 second. But in being in this business for 17 years, the one thing that I can tell you is I have seen how amazing real estate can be leveraged for people and to use it for their vision. Like, I've seen people that have taken equity out of their homes and invested it into franchises, right? And through that have been able to buy or invest into multiple franchises. So they've leveraged the equity out of that house and used it for that. And I've seen that throughout the years in various different areas. And I'm seeing it now. But here's the key that I want really to get home to your viewers right now.
Right.
Think about where interest rates have been historically over the last 20 years, right? I've seen interest rates at 10%, 8%, 6%, 5%. And let's understand where interest rates are now. When you're seeing interest rates averaging about 3% on a 30-year fix.
Crazy.
To me, that in itself should say to you, if you have ever thought about leveraging the equity in your home to invest into something and borrow money, now is the time to do it. Right. I was able, on a 10-year mortgage, we locked in an individual at 2.25% on a 10-year mortgage. To me, when I think about that, that's almost like borrowing and next to nothing when it comes to housing, right?
That's true.
For almost 2%, you can leverage and utilize that money. So we are starting to see a lot more people, taking advantage of refinancing, taking out equity. A lot more individuals nowadays are taking out to invest into properties much more than, let's say, the visions of their business. But I think whether you have it's what you have a passion for, right?
Right.
If you're a restaurateur, right? Now is a great time to take out money and invest it, right? Where we have some companies, unfortunately, that need to get out of their current position of owning a restaurant. you can now take advantage of stepping in and increasing your awareness and having multiple restaurants or whatever it may be. But the bottom line is, I feel that now is an amazing time. If you are out there and you have a property and you have equity, I mean, you really need to take advantage of where rates are.
No, definitely. Now, you deal with both commercial and residential lending?
Yes, yes. So we actually tend to broker out our commercial because we're not a full-fledged, direct lender when it comes to commercial. But on the residential, we do. And we actually do have the ability to lend what we call non-QM programs, right?
Okay.
So this is not your traditional type of lending. So for all those that are self-employed, I mean, this is important because many of us that are self-employed know you try to go get a mortgage or go get a loan, and the first thing the bank says is, so let me see your tax return so I can see what your income is. And most of us that are self-employed know what that next thing is, that okay, I don't show much income on my tax return, so does that mean I can't get a loan? And the bank says, well, unfortunately, we can't lend. So we actually lend, and we have our own programs designed to lend to self-employed borrowers where we might use bank statements to, create a profile for your income. Or we might be able to utilize a CPA letter and a profit and loss statement to, create a profile for your income. So these are ways that have opened up lending to a lot and a huge portion of people that could not get financing.
Yeah, that population of self-employed, it's a tricky one, right? Because obviously for tax purposes, I mean, you should really consult your accountant. But to be able to get lending to that population is really critical. So I'm glad you mentioned that. I'm glad you have a program. We know that a lot of folks that are listening right now have their own businesses, and they may want to find a way to kind of get into the real estate world. That's really your chance. And you talking to right now is the time to ask your questions and be able to do that. I think we have another question from Hakeem, which is a great question because I've had a lot of people ask me that people are saying buy and wait, or others says wait to buy at the right time, which is the right approach to real estate within the context of our current national climate. So I can chime in when you're done as well, but go ahead.
Yeah, that is definitely a question that I am asked almost on a daily basis, especially by first-time home buyers or people that want to invest, is now the right time? We have to look at New York, or let's say even the tri-state, right? We have to look at where it is that we're looking to purchase and how that market is. So like, for instance, what I see a lot of in, let's say, the boroughs and in Long Island, and I'll kind of stay on that first. There is so much demand for people that want to buy, right? Meaning that people are saying, hey, listen, if this happens again with COVID, I don't want to be stuck in an apartment with a family where I've got to teach my kids, work from home, and do everything within these small confines. So I want to get a house as soon as I can. So we see a huge amount of demand from those people already, right? That coupled with the fact that you have lower inventory so far because a lot of people have been scared to list their homes. What that has created is a demand increase and a supply shortage. And so what happens with prices? They go up.
Goes up.
Right? So the thought that people have of, well, the market's going to drop 30% or 40% like it did back in 2008 and 9 and 10 is not going to happen. It is not a reality, right? There are certain areas like maybe on the North Shore or certain areas in New Jersey that the market is a little softer, maybe down about 10 or maybe even 15%. But let's say on average 10%. It's not going to drop more than that. And you should take advantage of, as I said, even if it's a 5% drop in the market right now, you should go out there. Because as I said, the most important thing is the interest rate. Because what good is it if the market drops, on a house you're looking at, instead of getting it for $300,000, you get it for $280,000, but instead of paying a 3%, you're paying a 4% or a 4.25%. But you're paying that 4.25% over 30 years, right? So you're better off taking the 3% at even the 300 versus the 290 price.
Mhm.
That's the way to look at it.
Yeah. A lot of people don't look at it that way, because when they're looking at 1% or 1.5%, it's not for a month; it's for 30 years. So
Yeah.
the compounding effect of it, that's an extra 20, 30, sometimes 100,000 more on your property. Hence why I've always talked about, if you want to get into this mindset of creating your own, the best thing you can do for yourself is get your credit up to par. And there are many folks out there that can help you do that. There are companies that you pay to do that. But I think a lot of it, while you have time with COVID, you can help do that as well. So you have to be able to prepare yourself to take advantage of any opportunities when it comes. Don't wait for the opportunity to come, then you don't have time. Hence why what you said about, you can go get conventional credit, but if you're going to buy a house, I'm selling it, and I'm already know that I'm giving it at a cheaper percentage. What you think I'm going to do? The person that have the mortgage, that can secure a mortgage the fastest, is going to get the deal. Hence why you see a lot of people say, I'll buy your property cash. Listen, if you don't have to go through that whole process, you're better off. So it's better to get your credit fixed, then you can align yourself with the right mortgage, the banker, a lender, and be able to take advantage of opportunities. First Republic Lounge, are there products that you don't offer, or your clients you cannot help with, or some clients that you're unable to help?
So that's another good question. And here's the thing. I think it is important for the viewers to understand that a lot has changed during COVID. And that has impacted lending as a whole nationwide, where
Right.
banks have now tightened up on their guidelines in certain senses, right? Like there's certain lenders, unless you have a 700 credit score and above, or you're putting more than 20% down and have a 700 credit score, they will not approve your loan. They will
Right.
not lend to you. There are certain ones that have a 680 credit score requirement. So for right now, we have actually had to, unfortunately, increase our credit score requirements to a 620 to a 640 on certain products. But again, when I look at,
That's not high,
the
man.
fact,
That's pretty good.
right,
Listen, a
and that's what
620
I'm
and
saying,
640 is doable.
compared to the majority of the country and lenders, that is still a pretty, I mean, doable, like you said, right? It's pretty flexible in terms of requirements. Now, in terms of products, I can't think of, let's say, a product that I don't offer that can be offered somewhere else, right? We really do try. Now, there are, from lender to lender, especially when it comes to commercial financing or community financing, that might change.
Okay.
Some lenders are a little bit more aggressive in certain community types of programs. And again, that varies from area to area, because you also have to understand that some lenders and some banks, they get money to lend in those areas, right? They get funding to. I think I lost you there. I was saying,
Yeah, I'm here.
some companies, yeah, sorry, some companies, they get funding from their state or their local government to be able to lend to those communities, and that's only specific to them. So
Right.
those might be programs that we're not able to offer. But I would say, if you were to look at lending as a whole from the majority of banks in the country, we are on par with every single lender.
No, I think that's good. That's good to know that. That's good to know. Now, as far as, I think someone has a question, but as far as money, how much do you think one needs to get into this market? But because in the tri-state area, properties are pretty much very expensive. But I have friends that have invested in Detroit, in North Carolina, for example, other markets where properties are going for, the returns are not the same, right? But it's all relative of how much you pay for it. So having the decent credit score, from your experience, what would you advise to someone that doesn't know, they don't know how much money to start, the right credit score? What do you think one needs to be able to equip themselves in to get into the game?
So you said something really important there, right? We don't always have to look at, let's say, the boroughs to start our lending or our investing or building our portfolio. I have a friend of mine that's building a portfolio right now in Pennsylvania, because there are
Mm-hmm.
areas in Pennsylvania where he's getting properties between 100,000 and 150,000. But he's getting those same properties rented for 1,800 to, 1,500 to $1,800. That is
Right.
paying it's paying his mortgage and putting money in his pocket. Or he had a multifamily property, a 4-family in Pennsylvania that he got for 125,000. That each unit he's renting for $1,000 to $1,200. And his investment into that property, I think, was about 7,000, roughly around 7,000 into
Wow.
that 4-family. So we don't have to necessarily, build our portfolio in New York. So here's the thing: you don't have to become an overnight success, right?
No,
Meaning
there's
that,
no such thing.
right? Meaning that you can start and build that portfolio in Pennsylvania, leverage after a few years the liquidity, right, and the equity that you've built. As I mentioned, take out a blanket mortgage and now have a couple $100,000 that maybe you could go into a bigger project. That's really how it should be done. And so I tell people, look, if you've got, $4,000, $5,000, $8,000, if you've got a 620 credit score or above, it's a great time to be an investor right now. It's a great time to buy a property right now. It's a great time, but venture out there. Connecticut, great. New Jersey, great areas. Pennsylvania, great areas. As you said, there's tons of opportunities in Florida, in Carolinas. I mean, all over the place. But you have to be willing to say, I'm not just going to go outside and look around me what's down the block and say, well, yeah, I can't afford buying this home for 600,000 or 800,000.
Right. And then also people not looking at, when we're talking about building wealth, you also got to look at the tax breaks. The things that you're building, you may still have a 9 to 5. And one way to offset these things is if you own properties, when you do your taxes, it helps you with income tax as well. So, I mean, your accountant will tell you more about that. But there are ways to start. To your point, it doesn't have to be you get 100,000, you start investing, because let's be serious. In this environment, it's hard for people to come up with 100,000. But I can tell you that 3 of your good friends have 5, 10,000 each, and you could buy a property in PA. You talk about PA. One of my business partners bought a property down there, and right now people want to get away from the city. On a monthly basis, he's renting that out as what they call them,
Airbnb.
Airbnb, and making like a killing. So it's you just got to have the mindset. You just got to believe that you can do. The more you talk about it, the more you'll find people. And I found people like you. I'm pretty sure somebody else that's listening to us right now is going to send you an email or give you a phone call to say, hey, I have 10 grand saved. How can you help? And then you align yourself with the right realtor and be able to take advantage as well. I think someone asked a question. I think it's Akim again. Thank you for your engagement, Akim, about the investment in stocks, real estate stocks. What are your thoughts on that? I do have
Well,
Coin Cafe that does stocks. So,
well, I was gonna say, my specialty is obviously not advising about stocks, right? I'm
right.
about lending. My feeling about real estate is that, here's the thing: I look at real estate and stocks almost the same way, right? Over the long period of time, it's always gonna go up. That's what history has shown us.
Right.
Here's the thing I think about, especially for me, and I've had these conversations with my parents. They bought their first home back in 1986. And at that point, they had bought, in a really nice area, they bought a house for $102,000. That same house right now is worth close to almost $1 million.
Wow.
But I think about areas in Queens, in Brooklyn, in the Bronx, if we knew back then what we know now, right?
Right.
That those same homes that were going for 50,000 and 80,000 and 100,000, that now they would be worth 1.5 million, 2 million, 2.5 million. We would all jump in. It's also like a stock, right? If we
Right.
knew, and you use the example, if we knew Apple was going to be as big as it was back in the 80s and 90s, we would have
I
all
tell you.
invested.
Yes,
But what
indeed.
history and what stocks we always do is we look at the trends. We look at the past to predict how the future. But the one thing I will always say, real estate goes up and you always will see stock markets go up. There might be bumps in the road. There may be ups and downs, but the long chart always shows a progression. So I am always a big believer that real estate is always a great way to invest.
No, I definitely agree. So, guys, if you do have questions, feel free to pen them in. But I'm going to, what are some of your parting words? I know I've had you for about 30 to 35 minutes, and I am so thankful that you are able to join and share some great best practices. We didn't talk just about real estate, but we talked about a whole plethora of things, a whole thing, because getting in this game is not just about, there's real estate, but there are things that you got to be able to understand about you, your risk appetite. Are you a person that aggressive in the fact that how they approach certain things? Because it's a market that's very challenging. As much as we talk about real estate, it's a great way to invest. It's a great way to do things. We know some people have taken a lot of hits as well. But at the end of the day, in the long run, if you look at every person that is successful today, most millionaires or billionaires, they've started, most of them in real estate. Every president I've read about started in real estate. So it's one way. One thing that I'm 100% sure is that we're not creating any more land. There's no more land that we're going to make available. God is not going to make another parcel of land somewhere. So whatever we have, if anything, is getting smaller because of, life in itself. So it's whatever you own, whatever you can get a hold on. If it's in PA, if it's in Detroit, a lot of markets gonna have to come back. It may take 20 years, it may take 30 years, it may take 50 years. If you can get your hands on it, find a way to connect with a few friends, and that's the community that we want to be able to build. Right now, you're able to reach out to Rajin by just having a phone call because you just made a new friend within a 30 minutes conversation, because you can say, hey, listen, I listened to you. This is how you connect. That's the network. That's what it's about. It's not some BS nonsense. It's just, that's what life is about. The more you are talking about things, if your friends are not talking about investment, real estate, fitness, how to be better in life, get yourself a new set of friends, because you're in the wrong crowd. You're going to sink. You will sink. If it's all they talk about is about people, then you're in the wrong crowd. You got to level up. So any parting words, Rajin, for
Yeah.
the
So
folks listening?
the one thing I really want to encourage your viewers is that, there are opportunities in life, right? Again, if we look back to 2008 and 9, there were tremendous opportunities for people to go in and invest. Unfortunately, a lot of people were scared. They played the jump rope type of thing. They were scared to jump in, right? They had 1 foot in, 1 foot out. But what they realized after the fact, in 2011 and 12, that, man, that was the great opportunity for me to get into it. And it's the same thing again now. As I said, it might not be that home prices are down 30 and 40% like they were then, but I cannot stress enough that in my 17 years, I'm saying that this is another great opportunity for people that, as you said, it doesn't have to be them by themselves, but they can come together collectively, form a corporation, right? Come together, form a company, and go out there, leverage the little that you have, put it together with people that you know, and invest. And it only takes one, and you build from that one, and that two, and that three, and it grows from there. But the reason why I said this is a really great opportunity is because of the interest rates. That is really the key. And now is the time for you to take advantage of it. And here's the other thing I want to say. More now than we've probably ever had is access to information. We all have access to information. We might not have all of the answers, but we have ways to get answers to our questions. Just this alone answers questions. The internet answers questions. But as you said, the focus has to be here to say, I am not just going to sit back and watch everything go by and then jump in when I see everyone else jumping in. It's about taking the time to say, like you said, you have to, the mentality and the mindset to wake up and go out and make it happen. That's what I encourage people to do.
Listen, I don't know how else to say. Thank you for joining. Thank you for being part of the virtual network experience. Guys, Meadowbrook Financials, Rajin Ramdeholl. So I have his email address pen as well. And we're going to post the live on Curly Maj, I believe, and maybe Virtual Entrepreneurs Network as well. For you to follow him, reach out if you have a question, get with a friend and come together, and he'll be able to advise you, and use him as a consultant to be able to advise you and leverage him to get a loan to be able to really get your business started. So, brother, thank you for joining. I truly appreciate your time.
Thank you as well. I had a great time. I appreciate it.